Hi there, welcome to Kneppy Invest and welcome to another technical update video. December 22, 2024, we are in, or we'll be going through one of the quietest periods in the investing calendar over the next week and a bit. In fact, the market will be only open 2 full days this week. So on the Monday and also the Friday. Christmas Eve, the market closes a little bit earlier. I believe at 2:10 p.m. Sydney time, so it closes about 2 hours earlier than usual. That also happens on New Year's Eve. That's understandable, New Year's Eve. I'm not sure why Christmas Eve. Maybe it's like a present to the employees, investment bankers and the ASX, so they can go home early, something like that. And then it's closed, of course, on Christmas Eve or Christmas Day and also Boxing Day. Also closed on New Year's Day, which falls on, well, that would fall on Wednesday. So New Year's Day falls on Wednesday, yeah. And then it should be opened back up, the ASX, fully on Thursday, but fairly quiet period of time of the year because everyone's away on holidays, celebrating Christmas, New Year's with family, friends. So companies are less likely to release price-sensitive announcements this time of year, but that's okay. We deserve a quieter period in the year. Less things to talk about when it comes to ASX Daily Rundown. But companies can release price-sensitive announcements. I've seen trading updates, profit upgrades released between Christmas and New Year's Day. Pretty sure Dust Group did that a few years ago on December 28th, so it can happen. So it does pay to pay attention this time of year. Now, I'm going to do something a little bit different with the charts in this video, something I've been looking at a little bit more and more lately. So this is the usual setup I look at. So I have two moving average ribbons, 25 and 50 day, and also the 100 and 200 day. And I've also colored or shaded the areas between those two moving averages, so 25 and 50 and 100 and 200, with either green or red, depending if it's in an uptrend or downtrend. But I've just wanted to simplify what I look at. And the reason I want to simplify is because I'm trying to develop some rules that I can follow. The more rules I can follow, the less emotion is at play when making decisions. And in fact, that's a pretty good thing because we are human beings and our emotions can play havoc with our decision-making process. So what I've been looking at, and this is a fairly easy transition, just by pressing 3 buttons, is this. So I have two moving average lines, the 25 and the 100, 25 in red, 100 in blue. And I've also included an EMA cross, so exponential moving average cross between the 25 and 100. So I've been looking at this over the last few days and I actually do like it. I do like it, and I'll probably go into why I do like it as I go through some individual companies' charts later in the video. I have 11 planned, but I might have a look at some of the companies I am trading just so you can see what I'm looking at and why I think this process would be a little bit easier for me to follow in the future, and decisions be much easier to make. So over the last few weeks, I've found at times it's tough to make a decision, and this should take that out of the equation, hopefully. Anyway, so I'll leave it at this, and what I'll do in this video is fairly similar than other technical updates video. Go through indices, commodities, Bitcoin, which is now below $100,000, by the way. Also have a look at bonds. I'm pretty sure that's probably on a tear, while the currency, Australian dollar, has been going down. I did see some tweets complaining about this, and in fact blaming the government for the fact that our currency is going down. And I think that is a little bit unfair. It's a little bit harsh. In fact, I do think one of the politicians, what's his name, Kelly, was complaining about it, saying, oh, what a horrible government. They have created the environment where our dollar is collapsing. It's not the government. Ugh. Anyway, I just wanted to reply to that. And then we'll have a look at some individual companies' charts that do look interesting, including two banks. I've included ANZ and CBA in this, and you'll see a massive difference between the two charts of these two banks. And I don't understand why. Well, sort of do, but and the other companies' charts all look interesting. Okay, so let's start off with the Australian indices. So this is the XSO. So let's go to the XJO, and you can see we had the moving average cross in December last year. So 1 year ago, we had the moving average cross, which tells me the market has been in uptrend since then. And there's been no reason to be bearish So the last time the XGO fell below the 100-day moving average was back in or during the yen carry trade debacle. But most of the times, the 100-day moving average does act as a bit of support. We have seen it hit the 100-day moving average quite a few times. And on Friday, it did fall below quite powerfully. Unfortunately, the ASX overreacted. I'm not sure why we had a big down day on Friday, because Wall Street had a really good day, but we'll talk about Wall Street in a second. However, in saying they had a good day, yeah, there was a little bit of selling late in the day. Anyway, so I do think the Australian market, the ASX, is oversold, and I would expect a pretty good day on Monday, and I wouldn't be surprised to see us rally back up to, say, 8,300, 8,500, or even get to new time highs in the new year. Wouldn't be surprised at all. However, on the flip side, maybe this is the start of a bear market, because I do know there are buy the dips investors out there, but eventually one of those buy the dip opportunities will just keep on going down. And that will be the start of the bear market, because all bear markets start with this sort of fall, of course. Anyway, so I would say this could be the buy the dip situation, but just be wary of that. Anyway, so let's have a look at the XSO. A little bit less bullish on the XSO, but still, yeah, still going, well, I wouldn't say going up. It's gone down the last 3 weeks, because it did hit the all-time high. When is that? That was the all-time high was early December. So yeah, that's about 3 weeks ago. A bit of a double top there, and now it's been going down. So a little bit of weakness in the small caps. In fact, it's only gone down 5 to 7%, probably 7% or so. So nothing significant. We're not talking about a drop in the market of over 10%. So nothing to be concerned about at all. We see these sort of drops all the time. Anyway, so that's the Australian markets. Even though we have seen, by the way, let's have a look at the weekly chart, because the XJO would have fallen a fair bit this week. Yep, 2.76%. But the last time it dropped by more than that was in April. So we've had worse weeks this year. So this wasn't the worst week of the year. We've seen worse weeks this year, but we've been in an uptrend the whole year. So you can just see, even though we had a bad week, and you could say maybe we've had 2 bad weeks in a row, just because out of a bad week doesn't mean that's anything negative. The XSO would have fallen by probably a little bit more, down 3% after being down 2.34%. So 2 bad weeks in a row, but I do think both indices are oversold, so I wouldn't be surprised to see a little bit of buying coming in during the next week, even though it's a shortened week. Okay, so let's move on to the American markets. First, have a look at NASDAQ. Their week down 2.25%, but there is an uptrend there, and on Friday, the market bounced. The reason I say it bounced, and I also mentioned earlier in this video that the market actually did sell off during the last part of the day, but the market opened down, and I think that's why the XJO, XSO were down. I believe the American futures were down, and that's why we panicked in Australia. And we can see that just by looking at the 1-minute chart for the NASDAQ. It did open lower at 12:30 p.m. or 12:30 a.m. local time. It did open down 0.8% on open, and that was almost the low of the day. And then it rallied within the first few hours, a beautiful rally. But we did see a little bit of selling coming in late in the day. So we were a little bit off the daily highs by about a few hours. So that little bit of selling late in the day, I wouldn't say it makes me nervous, but it does show a little bit of weakness in the market, just a little bit, but not a lot. And you can see that in the daily chart with the NASDAQ, but there is a little bit of a shadow above the main body. It's just a little bit. So we did see buying coming in first half of the day and then selling coming in the second half of the day. And it's really interesting because there is an uptrend, and I'm just waiting to see if a break in that uptrend does mean the bull market is coming to an end. It's a short-term uptrend, by the way. It only goes back to August. So maybe you could say short-term, I wouldn't say bull market, a short-term bull market. I don't know. And it did fall through that on Friday, but then rallied back above it. So that does show a little bit of strength. Now, the Dow Jones did make news during the week because it had, was it 10 or 11 days, down days in a row, which was a record going back 50 years. Yes, 50 years. And then the next day after that record broken, it was up 0.04%. Funny enough, because I did see 2 tweets, 2 consecutive days. So it was a record since 1986, and then the next day, record since 1974. The amount of down days the Dow Jones did see in a row. And then significantly broken on Friday. We had a pretty good day. Dow Jones Industrial up 1.18%. What about news flow? Any news flow? Personal spending, personal income, core PCE price index. Okay. Anyway, so the other thing I noticed is if you go back to when the Dow Jones moved into an uptrend in November last year, the 100-day moving average does act as a nice support level. So on occasion, the Dow Jones does fall below that 100 moving average. We saw it happen quite a few times between April and August, and that did act as a support. And we have just seen it potentially bounce off the 100-day moving average as well. So hopefully the Dow Jones goes on a bit of a tear and gets to new all-time highs, but I'm just hoping, and hoping is not an investing strategy. Now onto the Russell 2000, the small cap indices, and this is probably a little bit less or more bearish or less bullish. So this purple box did act as a resistance zone for about 4 months between July and November. It broke through it early November and looked like it was moving into a nice developing uptrend. It found a little bit of resistance at about 2,440, which is highs this particular indice saw, all-time highs, I think, saw back in 2021. It did have trouble getting above that level, and then we saw it pull back, and it pulled back into the box. And right now, the Russell 2000 is right in that box. It actually fell below the box on Friday's session and rallied back into it. In fact, it's almost halfway into the box. So that box right now, you could say, is support. If it falls through that box, that would be bad news. The other thing is, just like the Dow Jones, you can see on occasion, the Russell 2000 index falls below the 100-day moving average for brief periods of time and then rallies. So maybe we're seeing that again. So again, 100-day moving average probably acts as a support level, maybe even the 200-day moving average. And we can actually see that if I just include this. Yeah. In fact, I'd say the 200-day moving average acts more as a support than the 100-day. Yes. Okay, so that's the American indices, all still looking good. We've had a couple of bad weeks. In fact, the Russell 2000 was down this week by 4.45%, so that's pretty nasty. Dow Jones was down by only 2.25%. Okay, so let's turn our attention to the international indices. And I've mentioned previously that the Nikkei and the FTSE just really going sideways. Nothing much happening with either of the indices. And is that still true? And I think it is still true. Nikkei just going sideways. It's been going really sideways for about 9-10 months. You can see that the yen carry trade debacle, that was just no reaction from the market, and it moved straight back up into that consolidation phase. So no trend with the Nikkei right now. And I'm just wondering if there's any value in Japanese countries, because I have heard there's actually quite a bit of value in Japanese countries. So maybe I should have been doing more research in that space, but the Nikkei is just going sideways. And the other one was the FTSE. Yeah, this is going sideways, but interesting, on Friday, you can see a bounce, a beautiful bounce off the bottom of the trailing range. So the FTSE is in this training, or is going sideways, trading in a range, and it bounced off the bottom of that range perfectly. So you can definitely see that around about 8,000 is a nice little support level for the FTSE. We've seen it bounce off that level now 3 times since August, and a beautiful bounce on a Friday. But again, FTSE just going sideways. Can't say the same thing about the DAX, but we'll get to that in a second. Hang Seng was feeling bullish about this one about 3 months ago, less bullish now, but you can see we do have a crossover in the moving average. There was a positive, the first positive one was in April, and then we saw it cross back down in July, but that was short-lived, and maybe more positive or more longer-term potential crossover. Does that make sense? Potentially, this crossover will be more longer term. So this does look a little bit more promising just based off what I'm seeing on this chart. And maybe this little bit of a dip is a buy the dip situation for the Hang Seng. But I just don't like how much it did run up because of that Chinese stimulus story back in October. I would have preferred it if it was like a more slowly, steadily rising in this index. But anyway, definitely a little bit more bullish about this particular index than I would have been through most of 2024. Definitely 2023, very bearish. Yeah, it's been bearish for a while. And finally, the DAX. We did see it pull back a little bit during the week, which is understandable. Pulled back 2.55%, but still in an uptrend. Still in a beautiful uptrend. And that's still confusing because DAX, or the German economy, is in absolute trouble right now. The DAX is doing the complete opposite. Again, the economy and the stock markets are not perfectly related. You might hear that quite often, that the economy and the stock market are not one and the same thing. I'm not sure if Donald Trump understands that. I think he looks at the stock market too much and thinks that if the stock market's going up, that suggests the economy is doing well. It's not absolutely true. Okay, so that's the indices around the world. Now let's have a look at some commodities. I have made the decision to trade less within commodities just because I tend to do worse trading individual companies or individual mining companies than non-mining companies. So I thought, if I do worse, why am I doing it? Because I just find the movement in commodity prices are less reliable. Yeah, less reliable. I'm going to say it. But in saying that, I will really trade the bottom of the cycle. So I'm really interested in lithium because I do think that's near the bottom of the cycle. I'm not sure how long it's going to last, this bottom of the cycle, but this is when I'm more interested, or why I'm more interested in lithium than I say I would be in gold. Because even though gold is in an uptrend, it may not continue. So that's what I probably will be doing in the future when it comes to commodities and mining companies, is more play the bottom of the cycle story than anything else. Okay, so let's have a look at gold. So gold is still an uptrend. It's been an uptrend since October last year. No signs of trouble. However, it is starting to look a little bit more sketchy. We need to see it starting to move up. We need to see it get to at least all-time highs. We did see it go sideways for a period between April and July, but eventually it did get to all-time highs. We need to see that again. We really need to see that again with gold. It did finish the week on an okay note. Up 1.11% on Friday. But overall, I think the week would have been down. Yeah, the week was down a little bit. Weekly chart still looks pretty good. No complaints there. But gold, if you do have a look at all the charts of commodities, gold does look one of the best. Don't think I can say the same thing about silver. This does look weak. Now, again, a good day on Friday, but it did fall through the uptrend on Wednesday and then really fell below on a Thursday. So this looks little less bullish. In fact, I'd say this is almost looking bearish when it comes to silver. So it'll be going to be interesting to see where this moves over the next week. Again, it finished pretty good on the last day of the week. What about copper? Haven't been positive about copper at all. Not really negative either. There's no trend with copper. And one of the reasons you can tell there's no trend, you can see all these moving average crosses over the past 5 months, being 1, 2, 3. That tells me there's not much of a trend happening. Sometimes you'll see this quite often, but I've seen this on occasion with companies in uptrends. A good example of this might be NWH. I saw this yesterday. So definitely the share price has been an uptrend since 2023. And on occasion, you will see these crosses, but they're very close together. And you can see when it goes into an uptrend, the next cross is a little bit more spaced apart. But if you go back to copper, these crossovers are, fairly spaced apart. That means there's no trend. Hopefully that makes sense. Anyway, so no trend really in copper right now, and I'm not interested in copper companies. What about iron ore? If anything, iron ore has been in a downtrend, and we see two close crossovers here, but again, fairly close spaced closely together. So that was sort of a false break. So it's really been in the downtrend. Iron ore's been in a downtrend since February of this year. There was another crossover, but I think we're going to see another crossover again fairly soon over the next few days because iron ore has dropped over the past week. So again, two crossovers fairly close together. What you want to see is a crossover and then no recrossovers for a while. And we able to see that when we look at some of my charts that I'm trading right now. Okay, what about uranium? This is weak. Uranium is weak. Now, there might be a bit of support at about $23. This is a spot physical uranium. So there might be support at about $23, maybe. But again, if anything, uranium's in a downtrend. It's going down. What about oil? If anything, in a downtrend. Nothing much to see with oil either. A little bit of volatility in there, but nothing to see, not only with the short term, but also the long term. Let's have a look at the weekly chart. I'd say, if anything, it's going sideways, and this confirms it. You can see all these crossovers, many crossovers over the past few years. That tells me there's no trend. But if anything, if you do look at the weekly chart, there is a bit of a downtrend because the last crossover we saw was in July. So if anything, we are in a downtrend when it comes to oil. What else? What about lithium? So have a look at the weekly chart, and still nothing here. I think this is the bottom of the cycle, to be honest with you. But I think I said that back in start of this year, and it has fallen a little bit since then. I did have a look at some lithium companies' charts. For instance, Pilbara. I don't think I've included Pilbara. Pilbara is at a really interesting level. So let's have a look at Pilbara. Why not? Yeah, let's have a look at Pilbara. Pilbara is at a support level, and that support level is $2. But it's in a downtrend. In fact, it moved into a downtrend on the weekly chart back in June. But if you look at the daily chart, Pilbara went into a downtrend back in June after going sideways. Yeah, yeah. In fact, there was not much trend, was there, for a long period of time. But I do think it's in a downtrend right now. But it's at support or very close to support. Is $2, or would I trade this? I'm thinking about it. Pilbara at $2. Support level. And other lithium companies, I had a quick look at all the lithium companies, and they all look really weak. Vulcan, probably my favorite of all the charts, but even this one has pulled back. And this could be the pullback. Yeah, this could be by the pullback. The really big volume came on Friday. So this could be by the dip with Vulcan. I do like that volume coming through. But again, this is a mining company. No, don't want to include it there. Yeah, anyway. Let's go back to commodities. And what else? What about coal? Ooh, coal looks weak at the moment. Again, this is going sideways. You can see going sideways, all these crossovers. But if anything, it wasn't an uptrend. But this downturn in coal over the past month and a bit, about a month, is a little bit concerning. And yeah, it's I don't like it at this point in time. So I'm really not paying much attention to coal right now. If I started to see coal make another bounce, and I really want to see coal get above these highs we saw 3 highs in a row at the same price during the period between May and October. I want to see that price, the price of coal get above that. But you might have to be a little bit more patient. What about tin? Tin, no interest in tin. Probably no interest in nickel either. Have a look at the weekly chart for nickel. Yeah, no interest in nickel. And finally, palladium. It did look like it was trying to break out. Not anymore. If anything, it's getting towards a support level. Yeah, it's getting to the levels, the lows we saw back in February and also August. And Kogan, all-time highs. Well, it's just pulled back all-time highs. Broke out all-time highs. Maybe this is one of the reasons why chocolate is now really expensive. I've just noticed that. The chocolate in the supermarket is so expensive. Prices have gone up significantly. Some of the chocolate is on special, and it's like that special price is like double the normal price it was a few years ago. I think I'm exaggerating just a little bit, but it seems like that's the case. Okay, so that's commodities. Some of the commodities anyway. Let's have a look at Bitcoin and Ethereum. Bitcoin has fallen back below $100,000. And we have seen a fair bit of volatility. You can see there was one day here, that would have been Friday, I think. Yeah, Friday, Bitcoin fell to $92,000 again. And then we saw buying coming in. So a lot of support when Bitcoin falls below 95,000. The whole reason I say that, you can see these tails or these shadows on these particular days. That tells us whenever the price of Bitcoin gets below that level, we see a lot of buying, and then that enthusiasm of the buyers pushes up the price of Bitcoin again. But it has fallen through below $100,000. So that is a significant psychological level for not only Bitcoin, but everything. Well, there's not many stocks that are going to get above $100,000, but it's a psychological level. I know I saw a lot of tweets, people talking about how they was going to sell Bitcoin when it gets $100,000. And then some said, I'm going to buy back in when it gets to 30,000 after selling. It's wild assumptions, but maybe it happens, maybe it doesn't. But again, a lot of people will sell at $100,000. And I thought if it was breaking above $100,000 and the longer it stays above $100,000, more chance we're going to see those people who sold get back in because of FOMO when they realize they made a mistake. But with it falling below $100,000 again, some of those will be thinking, there it goes. It's going to drop all the way down to $30,000 now. Now, Ethereum doesn't have the same problem. However, 4,000 seems to be a bit of a psychological level with Ethereum. And now it's down to 330. It says 3,300. I thought it was like, yeah, it must be 4,000. Yeah, it makes sense. For some reason, I was thinking it's $4 and $3, but yeah, 4,000 makes sense. So 4,000 is a psychological level, and it has fallen a fair bit. So if you take the decrease, it's fallen 15% since that level. Anyway, so this could be a buy-the situation for Ethereum. Okay, now let's have a look at bonds. I expect, before I have a look at the US 30 years, that it has rallied and maybe pull back on Friday. The reason I say that is because I can see it's down on Friday, but I expected a nice little rally. Yes, and it's rallied up to 4.75%. The last time it was this high was back in May, June. It needs to get above 5%. If it gets above 5% again, it only remained above 5% for a brief period in October last year. And remember, October, November last year, there was a bit of weakness in the market. And there was a bit of correlation there with bond yields going higher, and that did cause a little bit of weakness in the market. For instance, if we go to the NASDAQ and look at the same period, so we saw actually the NASDAQ did falter up until about the start of November. And if we go in, I think you can see it in the Dow Jones. Dow Jones saw its bottom reach towards the end of October, start of November, and then it started to rally. If we go back to the bond yields, you'll notice when the stock market started to rally, bond yields started to fall around the same time. Bond yields started to fall towards the end of October, start of November. So there is a correlation there. Anyway, so you would expect a bit of weakness in the market if we continue to see the bond yields rise, because that implies inflation might be a problem again, and interest rates may not drop. In fact, they may rise in the future. Okay, that's all I really need to talk about when it comes to bonds. No surprise here that bonds have rallied. And of course, TLT would be looking pretty bad right now. Yep, looking pretty bad. That's the TLT bond yield or bond ETF. Completely opposite. It should be like a mirror of the bond yield curve, chart, whatever. And finally, currency. Australian dollar has just nosedived down to 62 cents, 69 cents. It's went from 69 to 62 cents in a couple of months. I reckon it is oversold. Oh, interesting. Now, I don't usually do this. It is interesting, though. We did see the Australian currency get to this level back in October. So remember, bond yields rising in October, coming to an end in November. And as bond yields were rising, Australian dollar was falling. And there is a support at 62 cents. So I'd love to see the Aussie dollar bounce off here. That'd be awesome. Okay, and that's all I got for this portion of the video. Now we get to the individual companies. Now I'm going to show you some of the charts of companies I am trading, just with my new setup. Very simple setup. So let's have a look at 360. Why not? We'll start off with 360. And it's funny. So I bought 360 just after it broke out, just based off the cross. Now, to be honest with you, I bought not because it crossed over on the cross, but because that company released a really good trading update on the 1st of March, and then bought up on another trading update on the 9th of August, or maybe it was results. I can't remember. And the share price keeps on going up. And if you just have a look at the moving averages, you can see the 100-day moving average tends to be a nice little support level for 360 or Life 360. And I do have my sell price at $21, which right now is at the 100-day moving average. What about AMP? Some people laugh that I'm trading this, but we got a signal, sort of an uptrend or an EMA crossover in the 26th of June. But again, the share price could be going sideways at that point. Didn't really know. But then the company released something really positive. Results, 8th of August, and I bought on that breakout. And the share price has kept on going up. What about Ansell? This is another interesting one. You notice all these are in alphabetical order. So we saw the breakout, the crossover in the moving averages on the 5th of April, and I bought the next day. And then the share price just went sideways for the longest time. Patience. This was a good lesson in patience. I just thought there's no reason to sell just yet. And then the company released something good. Yeah, 20th of August would have been results, and the share price has gone up since then. So nice looking chart for Ansell. One I probably should have set out of was Bell Financial Group based off what I'm doing, but I had my sell price at $1.23. It hasn't broken through that yet. And even though we did get an EMA crossover on the 9th of September, share price of this has been going sideways all through 2024, and I've just held on. So maybe I should just take profits with this one and put my money to better work, to better use. But share price, maybe we might see another crossover soon. Bravura, this is an interesting one. So I was trading this. So I think I bought back in August last year. I can't quite remember. And then I traded it and I sold out sometime in the middle of last year or this year. And we did see the crossover. And then we saw another crossover. That was a negative crossover. And then we saw a positive crossover almost the day I bought. The day after I bought, we had a crossover. I bought just on a breakout above this dashed line. And yeah, the chart looks pretty good since then. So that was another pretty good time based off the EMA crossover. So I timed that one to perfection. Catapult, didn't time this one to perfection. I was trading this, and then I got bored because share price was going sideways. So this was a lesson learned in being patient. So I did that with Ansell, but I didn't do that with Catapult. So the share price of Catapult was going sideways for the longest time. This was between November and March, and I just took profits. I went, I'm going to take profits. And there was no crossover. So the crossover was November at a share price of, say, $1.10. And I was trading this. I bought back in May at about 80 cents, and then I took profits at $1.20. So it's a nice 50% profit, but I should have just held on. This is a beautiful chart. And I bought on, $1.79. So again, I made a mistake selling too soon, not being patient enough. And a lot of people will linger on that, and they'll just decide not to buy back in because I sold, I took profits. It's a mistake, I believe. And that is one thing I have corrected. I will buy back in if I make a mistake. And I did with a Catapult, bought at $1.79. So almost 50% higher than what I sold. And the share price is now almost double. Not quite. But no reason to sell this yet. It's still in a beautiful uptrend. What else? Oh, DGL. Although I think I have DGL in my... No, I don't. DGL. Okay, so we do have a crossover. 1st of November, it's crossed over. This is looking good. Unfortunately, we saw a false crossover back in February, and I did actually buy some shares at that point, and the share price collapsed on bad results in February. So sometimes you will see a false break. In fact, DGL happens quite often. You see a false break. I think this one's more sustainable. Particularly if the company releases something pretty good, some positive announcements. What else? Fish and Paykel. Yeah, I bought this one quite a bit after the breakout, the EMA breakout, which was in December, so over a year ago. I bought in March, so a little bit after that, but that's okay. Share price has gone up since then. Genus Plus, Gentrack. But let's have a look at Gentrack. This will be the last one. I've got way more I could talk about here. Okay, so this is a really interesting one. So there's me buying at $1.41 many, many years ago, and then share price just went sideways forever. Share price was going sideways when I bought in. I thought, yeah, the share price won't get much lower than $1.41. In a way, I was right. It didn't get much lower, but this was one I should have just instead of buying, I've just waited for a breakout. Now, it did look like it was breaking. I still remember this. It did look like it was breaking out in May 2021, but that wasn't long lasting. And then because the share price was really struggling, getting above, what was it, about $2, I just put this dashed line there. And I was just waiting for the share price to get above that. And then we saw another potential breakout back in October 2022. And the share price was $1.40. Exact same share price I bought. And then the company released something really positive in November. It could have been results. And the share price just took off, broke out above that resistance line on, it was a really powerful breakout too, on the 30th of November. Really good volume coming in. It was a very powerful breakout. And since then, the share price has just been in an uptrend. This is the sort of company you just want to own. It showed a little bit of weakness back in November, December, and I was paying close attention, going, oh, I might have to take profits. And then the company released results, and the market liked the results, and the share price took off again. Okay, so let's have a look at some companies I am looking at, some charts that I'm keeping a close eye on. We have to go back to my video technical. I have a feeling DGL is in this. Yes, I did include DGL in this. Okay, so we have 10 companies here. First one is SDI. This is one I've been looking at and going, why wasn't I paying closer attention to this one? So we had that EMA crossover. Now, we had one back in March, and then it didn't really last long. And then we had another one in July. But I'm pretty sure this particular crossover did correlate or correspond to some positive news from the company. The reason I say that, you can see a really good increase in volume. So I think that's another key, is if the crossover corresponds with a positive announcement and you see the higher volume, that could be a good sign moving forward. That's why one of the reasons why I'm paying close attention to this chart, because we had that, and then we could have bought in at about 88 cents or so. And yeah, chart since then has looked really good. But notice the volume. Notice the volume. October, November, December. We're seeing these one-day spikes in volume. That's a good sign that there is probably a fund manager, a funding taking a position in this company, and the share price keeps on going up. So yeah, if I was paying close attention to this one, maybe bought at say 88 cents, and it has gone up, yeah, about 30, not quite 40 cents, 30, 35 cents since then. And I do like this chart, and I like the volume as well. I can also mention, when I say chart, a lot of times I imply the volume. So I like the volume. I like the price action in the chart, in the volume. Maybe I should say that. So that's SDI. I'm pretty sure they sell dental stuff, yeah. Well, I like these seasonals. They have brought something new in TradingView, something called seasonals. I haven't seen this until recently. So technicals says this is a buy. Analyst rating, strong buy. Yeah, interesting. Okay, let's go back to another chart. Oh, Paradigm Pharmaceuticals. I know nothing about this company. And funny enough, one of the things about technical analysis, maybe you should not pay attention to the company. But I had a look at this chart and I went, oh, this is looking really interesting. So the first thing I did is have a look at what the company does. And there are things to like about this company and where they are at. That's what I'm going to say. So I can sort of understand what the market is thinking right now with Paradigm Pharmaceuticals. So share price was in a downtrend for the longest time, from about March, April 2023. Then we had the crossover, massive volume coming in. Again, don't discount the volume. Company just did a couple raising at 40 cents, I believe. Share price has dipped, but we do see a little bit of support at these current prices. So I think this little dip has or is coming to an end. So I'm interested in this particular chart. Another reason is when I had a look at my ribbons, the share price fell into my short-term moving average ribbon, which can be a support area or zone. Anyway, so I'm interested in taking a trading position in Paradigm Biopharmaceuticals. Main reason is because of the rally. Share price has dipped back, capital raising, and the volume. And I do think there is a potential, based off what I read, that this company could be making some really big deals in the next 3 to 6 months. Now onto a couple of banks. So we're going to look at ANZ and CBA, get a completely different story when we look at these two companies, these two banks. So ANZ, based off EMA crossover, just had a sell signal. Share price has really dropped a fair bit over the last few weeks, from $32 down to $28. Doesn't seem like a lot, but it's a fair bit. So we did see this back in August, and then it rallied. So we need to see a bit of a rally for this to be a false breakout or breakdown, a false move. Yeah, that's what we could say. So really looks a little bit negative when it comes to ANZ, which is interesting because this bank has a P ratio of 14. Now, I would buy ANZ if the P ratio fell below 10. So still a little bit off that. And there are precedents around that. I have actually traded ANZ using those exact parameters before, P ratio and price to book falling below a certain amount. And I've used 10 as a buy-in for ANZ. So this looks pretty bearish, but it's getting to the point. If it drops a lot from here, it could be a buy, just based on valuation. But when we talk about CBA, complete opposite. Chart still looks pretty good. You haven't seen a massive drop apart from Friday. You wouldn't be surprised to see CBA rise significantly on Monday. Massive volume coming in, but that could be end of week, end of something happening. That could be capitulation as well. But the chart still looks intact. The uptrend is still intact, but the valuation, P ratio is probably 27, 28, double that of ANZ. Let me just confirm. It doesn't have a P ratio there. And I would say the P ratio is 27, 28, double of ANZ. I don't think Commonwealth Bank should have a significant premium compared to ANZ. Not a significant premium. It should have a premium, but not a significant premium. And right now, it is trading at a premium. Okay, now let's have a look at a few other charts I'm really interested in maybe taking a position. First one is Straker. So this is a, what do you call it when you go from one language to another? What do you call it? Language stuff. Anyway, language stuff. We'll just say language company. Anyway, downtrend, 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 downtrend. I would say the company has been in downtrend since probably 2021. Share price at that point was $1.80. It's now gone down 67%. Downtrend, downtrend, and then all of a sudden a little bit of interest came into the market over the past month. We started to see a little bit of volume coming through, and then the crossover, and a little bit of strength in the last few trading days. When the overall market was down, Straker went up. That's a bit of strength. And in fact, the share price went up to 65 cents, which is, we're talking about a one-year high, over a one-year high in the share price. I can't remember why. I'm pretty sure the company did release something. Pretty sure the company did release something positive, but I can't remember what it was. It might have been just results. Yeah. So 27th of November, does that correspond? Yeah, it does correspond with the share price breaking out. So obviously those results were pretty good. And it's, yeah. So the market has reacted to strong results. So this is a nice little breakout for Straker. I just want to say Straker. So a possible trade there for you. Aroa, I've mentioned Aroa Biosurgery a few times now, and this is still looking pretty good. We sort of had a false break in the EMA crossovers back in June. I don't think I would have played that, even though it was breaking out. I would have been, I'm not sure. And then this one is, I think, a little bit better. And not only that, the share price has gone above the previous high. So this definitely is a chart that is looking better. So this is definitely a possible trade for me. The other thing is the company has been releasing some good announcements, if I remember correctly. I don't think it's not trading updates, but I've just been liking some of the announcements they have been releasing. So I think the sentiment is starting to shift. So they released the results in 26th of November. Can't remember the results, so must have something to do with my positive vibes in this company, must have something to do with the half-year results. Because I can't remember anything else. Or their Appendix 4C maybe as well. Cobram Estate Olives. I've traded this before. So I was trading this back towards the end of 2023 and started 2024. Then I took profits. And the share price started to move down. And maybe I should have bought back in October. This chart does look good. It's broken out above the previous highs, and this happened about a month and a half ago. And yeah, it looks pretty good. This is another company that released some positive news flow. Cobram Estate, Olives. Now onto PeopleIN. Bit of a controversial one. I understand this company is not high quality. So someone actually did mention, was it Thorpley Photography? It said, why would you trade a crappy company like PeopleIN? And because you can make money out of these crappy companies when the trend changes. And in fact, I do like this chart better than the movie, the MA ribbon one. So if I go back to my usual one, I do sort of see what's happening here, but I get a better visual. That's probably the better way to say it. I get a better visual with this one. So we did have a MA crossover at the 3rd of December. The other thing is I do follow this one trader, and they did get a signal almost exactly the same time I got. So I think they are trading this now. And this is an interesting or possible interesting trade. The other thing that this trader also said was the potential upside is much greater than the potential downside, which makes sense because share price of this company, even though it's low quality, share price of this company could easily get back up to $5, $4, $5. That was the highs. And the downside is not much lower than it is now. So there is potential, really good potential upside for this trade, and the downside isn't or wouldn't be all that much. And I do like that. I'm glad I listened to this trader talk. So they made sense. So even though I would say PeopleIN, local company, I want to keep my bias out of my decision making when it comes to these sort of charts. I just like this setup right now. Potential. I've already talked about DGL. In fact, it's fairly similar than PPE, isn't it? Sort of similar. Not really. We haven't had a signal with PeopleIN since it was going sideways back in 2022. So probably not much of a trade there, just going sideways. And it's been drifting lower since 2021. Kogan, so two more companies to go through. Kogan, this one could do your head in. So massive downtrend, beautiful uptrend, massive downtrend. And since then, generally the share price has been going up. But then you get periods of the share price just collapsing. And that's probably one thing and why I'm wary about Kogan right now. But I do like the price action. Maybe not the volume, but I do like the price action with Kogan over the last month or so. So I do actually like this chart. Probably not my favorite chart, but I do like it. And maybe the reason why it's not my favorite chart is just because there's just so much volatility in this company. And finally, Monadelphous. Now, this one could be a little bit early. We've just seen an EMA crossover on the 4th of December. Share price rallied, went sideways, and then the share price actually rallied on Friday. Even though it did drop, the share price went from a low of $12.97 and closed at $13.34. It does tell me there's a little bit of strength. I would love to see the share price continue to go up from here, $13.60, $13.80. That would be a good move for Monadelphous. So this one is definitely on my watch list just now. I'm not sure if I will take a position in this one, but it's on my watch list. Okay, and that's it. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.